morning, friends. We welcome you for the today's session. And today's topic, you know, that the doctrine of the Judiciary, binding precedent and merger. And today we have our learned speaker, Mr. B. Zaveri, with us, who will be enlightened on the topic. With this small thing, I request the chairman to introduce the speaker.
Good morning, everybody. It's a pleasure to introduce today's learned speaker, Mr. B. Zaveri. Honestly speaking, when you introduce someone like him, you are really short of your words, what you should say. Very modest and very sincere, very intelligent, very committed person. But then, just to put it very briefly, Mr. Zaveri is an advocate practicing largely in taxation areas since almost 35 years now. And he's been giving lectures also at various forums. He's a regular contributor to our journal, in the monthly journal, in the column of Supreme Court decisions. And he has also contributed various articles on the BCA journal, the Chambers journal, and he has also presented his papers at RCs of BCA as well as the Chamber of Tax Settlement. A very modest person, very easy to approach person, and whenever we are invited, he is always with us. Even the last time he was treated, the Javeri sir was there speaking on one of the topics. So we are really glad, sir, that you accepted our invitation again and joined us for this regular study course. With these very few words, I welcome Javeri sir to this study course and request forward to welcome you to our course. Before I request sir to address, I would request our Vice President Avinash to please offer a way to Javeri sir as a mark of our respect. I would request Javeri sir to please address.
Friends and allies and friends, again thank you for very kind words. In fact, I must thank the team of our chamber who relentlessly work for organizing these various programs, and I understand and appreciate the effort that is put in. As a speaker, you have to put in efforts, but to organize and administer, you have to put in a lot many efforts. When Peter had invited me once again to speak on the subject of res judicata, binding precedent, merger, I was slightly unhappy in the sense that I said, why to speak again after 2 years on the same subject? But I respect their decision because they take a decision after deliberation in a meeting of 7-8 persons. So I thought that they must have applied and decided, and it is necessary for the participants. So therefore, I must accept the word, and I accepted the invitation. When I was working on it, I once again appreciated their decision that, well, this doctrine of principles of res judicata, binding precedent, doctrine of merger, these subjects are pretty dry in the sense that they are very fine principles of law which one appreciate and apply in a day-to-day life when you are actually on your legs in the court. But they are also applicable in our day-to-day life and very, very important. In these principles, one need to repeat and reiterate again and again so as to refresh your memory and its application in a different situation. I once again prepared, as I had spoken last time in February 2013. So I was going through my old papers, then I was reading the latest commentary and then latest judgment. And I felt that, yes, these issues are requiring a time and again application of mind and refresher of the principles which are very important. Now to start with the subject, if we look at the subject which is allotted to me today, is first the principles of res judicata, whether that is applicable in taxation proceedings, when it is applicable, when it is not applicable, then principles of consistency, principles of estoppel, then binding precedent, and then the doctrine of perjury. So we will start with the first issue or the part of the subject, that is the principles of res judicata. Principles of res judicata is not a new subject, but it is an ancient, it is accepted in the ancient history. It was accepted by Roman jurists, the Hindu jurists, the Mohammedan jurists, in European continents, Commonwealth countries also accepted. Our Hindu jurists used to say res judicata means purva nyaya, a formal decision. What is res judicata? In the simplest form to understand res judicata, if A files a suit against B for a breach of contract and a suit is decided, either in favor of A or B, is irrelevant. If A is not satisfied or if A is not satisfied, A cannot file another suit for the same breach of contract, for the same issue, and say that no, I am unhappy with it. In my opinion, this decision is erroneous of the court, and therefore I reiterate and re-adjudicate. I want it to be re-adjudicated by the court. So, for the same subject, B cannot be made to face the suit for the second time. So, the subsequent suit is prevented, it cannot be put in action. That is called, in a simplest form, res judicata. A decision once given is final between the party, and therefore it cannot be re-agitated. This principles of res judicata is based on two principles. One is that it prevents the hardship to the individual, and the second is public policy. Now, it prevents the hardship to the individual in as much as, suppose if A is capable and is wealthy person, if he is not prevented from agitating the same breach of contract again, and B is not capable of fighting it, then B will have to let go and accept. So, the wealthy person, a capable person, will override the rights of the other person who is otherwise not liable. So it creates a hardship to the individuals, and it is against public policy for the simple reason that there has to be an end to the litigation. There should be end of litigation. A litigation should have its finality. If the principles of res judicata is not acted upon, then there will be no end to the litigation. It will be continuously till the end of the life of a person who has started the litigation. Now, as we will see on the slide, the Supreme Court has explained the principles of res judicata in a very succinct word, so I would like to draw your attention to that. Principle of finality of litigation is based on a high principle of public policy. In the absence of such a principle, great operation might result under a color and pretense of law, inasmuch as there will be no end of litigation and the rich and malicious litigant will succeed in infinitely vexing his opponent by repetitive suits and actions. This may compel the weaker party to relinquish his right. The doctrine of res judicata has been evolved to prevent such an anarchy. That is why it is perceived that the plea of res judicata is not a technical doctrine but a fundamental principle which sustains the rule of law in ensuring finality in litigation. This principle seeks to promote honesty and a fair administration of justice and to prevent abuse in the matter of accessing court for agitating an issue which have become final between the parties. Now the question arises that where this principle of res judicata is explained or put in the statute. For that, we see the next slide. Section 11 of the Code of Civil Procedure explains the principles of res judicata. It's very complicated language, but it's worth understanding. No court shall try any suit or issue in which the matter directly and substantially in issue has been directly and substantially in issue in a former suit between the same parties or between the parties under whom they or any of them claim litigating under the same title in a court competent to try such subsequent suit or the suit in which such issue has been subsequently raised and has heard and finally decided by such court. In other words, once an issue is decided in an earlier suit, the same issue cannot be raised subsequently. So this is what the section 11 of the Code of Civil Procedure provides. I have not expected explanation to section 11, but it defines formal suit. And formal suit does not mean that a suit which should have been filed or lodged before the subsequent suit. Even if a suit which is filed or lodged subsequent to the first subsequent suit, but if it is decided, then that decision will be a decision in the formal suit. So finality to litigation and conclusiveness to the decision is and principles of res judicata. Now, as we all are dealing with income tax, and as I also deal only with income tax, the question arises whether the principles of res judicata have any application to taxation proceedings. See the next slide. The courts have said that the principles of res judicata is strictly not applicable to proceedings under the Income Tax Act because every assessment here is an independent unit of assessment. The assessment is final and conclusive between the parties only in relation to the assessment for the particular year for which it is made. We file return of income every year. We determine our income, pay tax on it. For the next year, we file a separate return. So every year is an independent unit of assessment. And so therefore, a decision taken in 1 year should not strictly be binding both on the assessee as well as on the department in the subsequent year. The reason simple is that the facts in the 1 year may not be the same in the subsequent year. And therefore, strictly speaking, principles of res judicata is not applicable to res proceedings. In a civil suit, what happens? Suppose if I have some grievance against B for breach of contract, for that matter I will file a suit, and the decision is taken either way. To that extent, the decision is given so far as that issue is concerned, and for that suit is concerned between that party, two parties. But here is a case where every year an assessment has to be made. Every year an income is to be determined. Therefore, the court will say that, strictly speaking, res judicata has no application to the income tax proceedings. So, the principles of res judicata is not applicable when the contention is taken by the department or contention is taken by the SS. So, it is applicable to both the sides. Now, to appreciate in which circumstances the principles of res judicata is not applicable so far as the taxation proceedings are concerned, I would like to deal with 5 different decisions, and I will deal with each one of them, giving some facts of the case so as to appreciate that why the courts have held that the principles of res judicata is not applicable. So the first decision is that of Bombay High Court. It is a very well written, very intelligent decision of Justice Chagla in the case of H.A. Shah and Company versus Commissioner of Income Tax. It is very useful to read, and I would suggest whosoever wants to understand the principles of res judicata should at least read this judgment once. Because time and again, when we are on our legs in the court, we refer to this decision. But it enlightens you on this subject, how the principles of res judicata can be said to be applicable or not applicable in taxation proceedings. Because it deals with both the aspects of it, and it gives a final and the finality to that principle also, which I will deal with. Here the facts were very simple. There was an Hindu undivided family of Hiralal Shah. As per Hiralal Shah, the Hindu undivided was partisan among his 3 sons and himself. Of the 3, 2 were elder sons, the major sons, and the 3rd son was minor at the time of partition. And thereafter, the partnership form of H.A. and Company was formed. In the assessment year 1941-42, the tribunal held that Mr. Hiralal Shah is a partner in this firm in his capacity as a trustee of his minor son. And therefore, the loss of the firm, a share of loss, will be allowed to be carried forward in the hand of the son. And he is not a partner in his individual capacity. That decision of the tribunal was not further taken to the court. But in the subsequent years, in the subsequent 4 years, from 1942, 43 to 45, 46, once again this issue was raised, and at this point of time, and additional evidences were produced, and to show that he was a partner in his individual capacity and is not a trustee for his minor son. The tribunal had gone into this evidence carefully, looked into it, which was not earlier produced, and came to the conclusion that yes, the SSC is right. He is a partner in his capacity, in his individual capacity, and not a partner in the capacity of the trustee of the minor son. The issue then was taken by the tribunal to the High Court, raising that whether the tribunal was justified in law in departing from its previous decision, and whether the principles of res judicata is applicable. The High Court held that the principles of res judicata is not applicable in this proceeding, and that the tribunal was right in taking the decision that the SSC is a partner in the individual capacity. The court said that this court had carved out certain exceptions, that in which circumstances the principles of res judicata will be applicable even in case of taxation proceedings. And that there the next slide will see the court said that the principle of res judicata does not strictly apply to the income tax authorities, is not without any limitation. And 4 limitations have been drawn. One is, if the first decision was not an arbitrary or personal decision. 2. If the first decision was arrived at after due inquiries. 3. If no fresh facts were placed before the income tax authority, including tribunal giving the second decision. And 4. If the tribunal giving earlier decision has taken into consideration all material evidence. Well, if you apply these, the first will not be applicable because one can't say that the earlier decision of the tribunal was arbitrary or purpose, because whatever was contended before the tribunal, on the basis of those facts, the tribunal took a decision that the SSC is a partner in his capacity as a trustee. First decision cannot be said that it was not due to after a due inquiry was made. Inquiry was made on the basis of the facts made available. But the third criteria will be applicable in as much as that before, when the second decision was taken by the tribunal, the new evidence was put before the High Court, before the tribunal, to explain which was not there before the earlier tribunal decision, and hence the principles of res judicata is not. Now here I would like to share with you my recent experience in the court. The department had filed an appeal to the High Court against the order of the tribunal in one case, where the facts were that in the course of the search a diary was found. The diary showed that the SSC had carried on certain transactions of purchase and sale on a commission basis for others, and he had earned some commission. This fact was not in dispute. This diary was spilling over 2 years, partly in the first year and balance in the second year. As usual, the assessing officer added the credit side of the diary and made the addition of crores of rupees. The matter went to the CITW. CITW appreciated that here the assessing officer accepts that these are the transactions on commission basis. So the SSC could earn commission. But considering the amount of addition that was made, the commissioner took a decision that okay, I will add 20%, which was very abrupt and very unrealistic. But he took a decision that okay, I will add 20%. Thereafter, the second year addition assessment was made. Once again, the assessing officer made the total of the credit check was a balance period and added. Thereafter, the matter for the second year again reached the CITW. We once again explained to the CITW that this 20% is also abnormal, unrealistic, unbelievable, it cannot be added. This time he was little kind enough, he said, okay, I'll add 10% only of the total. Then the first year had come up before the tribunal, where both the SSC and the department were in a week before the tribunal, and the cross appeals were heard together. The tribunal gave a decision that once the SSC officer accepts that this is a commission income transactions, and these are not the transactions where the SSC had purchased and sold the goods, then he would earn commission. And what is the general profit of the SSC? Accordingly, the tribunal took a decision that 3% I will take it as a reasonable addition that should be made, and accordingly 3% of that. Then after the second year came before the tribunal, and following the earlier order of the tribunal, because the facts are identical, the same diary, etc., etc. So the tribunal and both the parties, even the department representative agree that the facts are identical, and hence the earlier decision of the tribunal is acceptable to the department, and therefore the 3% addition was made in the second year. Now the interesting issue arose. The department accepted the first decision of the tribunal, where for the first time the tribunal held that 3% commission should be added. Because the amount that was added was only 2 crore rupees. In the second year, the assembly officer added 18 crore rupees. Because the larger period was of the diary was there. And therefore, considering that the relief which was given by the tribunal was very high, so therefore they filed an appeal to the High Court. At the admission stage, I drew the attention of the court that, well, having accepted the first year's order of the tribunal, the department had no right to come in appeal. And the DR, the advocate for the revenue, contended that the principles of right judicata is not applicable. See, this is where the actual, in practice, how these principles, if you are very clear in your mind, are applicable. Then referring to this decision of the Bombay High Court, I drew the attention of the court that it is principles of res judicata is applicable because the earlier decision of the tribunal cannot be said to be perverse or arbitrary. It cannot be said that it is arrived at without due inquiry. It cannot be said that the full facts were not placed before the tribunal, and it cannot be said that the new facts have now been brought before the tribunal. In that circumstance, the principle of res judicata. So this is how the principles of res judicata, if it is clear in your mind, you can explain and apply them in the day-to-day life. So many times we feel that these are dry subjects, we do not know how they have an application in day-to-day life. This is where one can appreciate that how they are in day-to-day life. We do have one thing. So this was the first decision which I wanted to discuss with you and explain you. The second decision is that of Supreme Court in the case of the Amalgamated Coalfields Limited versus Janpat Sabha Chhinwara. Here, the Amalgamated Coalfield was a collier excavating coal, and therefore they were liable to pay coal tax at 3 paise per ton. And the authority was Janpat Sabha of Chhinwara. This was being done over decades. Suddenly, the Janpat Sabha of Chhinwara enhanced this coal tax from 3 paise to 9 paise. Well, in nowadays, we do not appreciate what is the value of 3 paise or 9 paise. But this is all of sometime in 1957-58, where the value of 3 paise had come in this substance. So therefore, and because of the enhancement of coal tax, the notice was issued for the period from 1st January 57 to 38 June 1957, which was challenged by the Amalgamated, and it was dismissed by the Madhya Pradesh High Court, and it was dismissed by the Supreme Court also. Then other 2 more notices were given for the period from 1st July 1957 to 31st December 1958, and for the earlier period from 1st of January 1951 to 31st December 1956, and a substantial demand was raised. Once again, the Amalgamated filed a writ petition, 2 writ petitions in the Madhya Pradesh High Court, and they were dismissed on the ground of principles of res judicata. That principle is now final. The Amalgamated is liable to pay coal tax at 9 paise per ton. Before the Supreme Court, it was contended that the earlier petition was dismissed on a different ground, and the present petition raises a totally different ground. Now the ground for disputing or challenging the notice is different, and here we are challenging the authority of Janpat Sabha to enhance the coal tax from 3 paise to 9 paise. Because if we look at their authority, they do not have a right to enhance it. They have a right only to collect poll tax. So this new ground is raised, and therefore the Supreme Court held that the principles of res judicata is not applied. So when you are challenging in the second subsequent suit or subsequent proceedings and raise a different ground for challenging it, which also goes to the root of the notice, then also the principles of res judicata is not applied. Now the third decision is of again our Supreme Court in Bridla Loya and Mahavir Prasad Khemka. I will not state the citation because they are available and they are in your hand also. Here also the facts are very interesting. This is the case of a donor. You must understand. This was the case of a donor. A person who gifted certain amount to his brother and nephew. The brother and nephew started a firm of carrying on business in jute and utilized this money. In the first 2 years, the tribunal had, in assessment in 1945, 46 and 46, 47, the tribunal held that these are not a genuine gift. And same decision had become final because the SLP was also dismissed by the Supreme Court. Then in the subsequent years, for assessment year 47, 48 to 51, 52, once again this issue was raised by the SLP, saying that no, my gift to my brother and nephew were genuine. And this time, the SSC filed further evidence. He showed his financial soundness, that when he was capable of giving it, he showed that what assets he had, what business he was carrying on, what was his profit. He adduced the affidavit, he made a statement on both. He adduced the affidavit of others who were knowing that this gift was given by the SSC. He also gave the evidence that the brother and nephew had started a partnership firm and they were registered. They were also assessed to sales tax. And he showed that the money which he had gifted were utilized by them for carrying on their business. And this is the last saying that I do not have any right, title, interest, claim or demand of any nature whatsoever on these amounts. Considering this evidence, the tribunal held that these gifts are genuine. The decision was taken in appeal to the High Court and thereafter the Supreme Court, and the Supreme Court rejected the contention of the revenue that the principle of res judicata is applicable once a decision is given in the earlier year that these gifts are not genuine, that is binding on the SSC and also on the department, that it cannot be re-executed. So the fact that in the subsequent suit you can adduce new evidence to buttress your argument and make the authority take this change in decision. Now the fourth decision is of a Karnataka High Court in the case of Micro Land Limited. Here also the facts are in assessment year 1999. The executive officer disallowed future warranty claim made by this. The executive was selling certain computer hardware and giving warranty. And for future claim in respect of the warranty given, he had made certain provisions and claim deduction. That was disallowed. When the matter reached the tribunal, the SEC contended that the assessing officer has himself allowed this future warranty claim in the subsequent year in the assessment in 1999-2000, he himself has allowed it. So therefore, he is not justified in disallowing it. Please appreciate that in the subsequent year it was allowed. The tribunal and thereafter the High Court both held that though principles of res judicata is strictly not applicable, but that does not debar the assessing officer to go into the facts of the case to find out what evidence the SSC had used to prove that this future warranty claim is justified. On what basis, what evidence did the SSC produce? Did the SSC show that in the past this type of claim on future warranty was claimed and he had to expend on those claims? What claims were made during this year and what expenditure the SSC had incurred? These facts have not been brought on. So therefore, the principles of res judicata cannot be applied just because it has been allowed in the subsequent year. So therefore, if the decision is given on the facts that the future warranty claim is not allowable and it has been decided on sound footing, then the decision of the tribunal is allowed. So the question is that no additional facts were brought on account for the year-end expenditure. Now the last is, the fifth one, is the case of our tribunal. This is also a recent decision where I happened to appear. Here in this case, the SEC was purchasing and selling shares and disclosing income of short-term capital gains and long-term capital. You all are aware that this is a very live issue, that whether it's capital gains or a business income, every alternate day we come across this subject. In the assessment year 4-5, the assessing officer decided that no, this is not a short-term capital gain and long-term capital gain, and he treated it as business income. The SEC did not challenge this decision of the assessing officer. So for the subsequent 3 years when the assessment were made, the assessing officer, referring to his own order for the assessment year 4-5 in the SEC case, held that you are a trader, you are not an investor, so these are not capital gains, these are all business income. It was explained to the Commissioner of Police and thereafter to the tribunal also that in the assessment year 4-5, the short-term capital gain was taxable at 30%. So whether it is a capital gain or it is taxed under the head profits and gains of business or profession will make no difference. And the long-term capital gain was taxed at the rate of 10%. So the total tax effect in assessment year 4-5 was less than 30,000. For that reason, the SSC took a decision that I would not agitate this. But that will not debar the SSC from contending in the subsequent years that I am not a trader, I am an investor in shares. Look at my action. I am investing in shares for now more than 2 decades. Every year I have shown investment. Every year I have shown investment and valued them at cost only. I have never applied the principles of cost or market price, whichever is lower. I have dealt in a limited scripts and there are limited transactions. And I have suffered the portfolio wherever I felt that the appreciation which I was expecting had already been achieved. And so therefore the SSC had acted as an investor. The tribunal accepted the contention that just because in the assessment year 4-5, the SSC had accepted the decision of the assessing officer would not hold that the SSC is a trader. The SSC can explain. So if we were to summarize this side decision which we have discussed, find out in which case the principles of res judicata is applicable or not applicable. First, as I have told you, and which we have seen in the next slide also, that the Bombay High Court itself has explained that strictly principles of res judicata is not applicable, but in which circumstances the principles of res judicata will be applicable for experience. So, when an additional evidence is produced in the subsequent year, the decision can be amended. In amalgamated, the Supreme Court held that there is a different ground taken, so therefore the subsequent notices can be challenged. In Rizal Loya, the court also had that additional evidence was adduced in the subsequent year. Therefore, the principle of res judicata is not applicable. In Microland, the court held that in this year the assessing officer has not adduced any evidence to SSC has not adduced any evidence to justify his claim. Therefore, the principles of res is not applicable. And in Dharmeshwar, the tribunal held that due to the tax effect, due to the circumstances, the SSC did not agitate the issue in the first year, would not debar the SSC from challenging in the subsequent years.
In case of gift, what you said, in case of gift, they have produced additional evidence.
Additional.
But still they did not accept.
No.
Yeah, it was accepted.
So therefore, they say that the principles of res judicata is not applicable. Because in first year, the tribunal held that this is not a genuine thing. But in the subsequent years, when the additional evidence is produced to show that yes, this SSC was capable of giving gift, then the tribunal is accepted. Now, we go back to the next slide once again. HSI, as I told you, is a decision which is worth reading. At the cost of repetition, I will tell you to read it once again. Because what the court has said here is that fine, principles of res judicata is applicable, not applicable, taxation proceedings, these are the four criteria. But in addition thereto, the court said that the effect of revising a decision in a subsequent year should not lead to injustice. Now this is very vital, please apply and appreciate. What had happened in HSR?